A very good morning to you. Thank you for joining us on Business Morning. I am BC Adebayo. We begin with oil prices, which are up today, lifted by comments from doctors for U.S. President Donald Trump, suggesting that he could be discharged from hospital today, and that's just a few days after his positive test for COVID-19 sparked a widespread alarm. Trump's health update eased political uncertainty in global markets, pushing Brent up to $39.69 a barrel, up 1.48%, and U.S. WTI crude was at $37.69 a barrel, up 1.73%. Well, prices have slumped more than 4% on Friday amid uncertainty surrounding Trump's health, adding to concern that rising coronavirus case numbers that could dampen global economic recovery. Well, prices were also supported by an expanding workers' strike in Norway on Monday that could reduce the country's production capacity by as much as 330,000 barrels of oil, and that's equivalent to about 8% per day of its total output, and that's according to the Norwegian Oil and Gas Association. And back home now, Nigeria's petroleum industry bill appears to be gaining traction following its first reading on the floor of the Senate last week, after President Muhammadu Buhari sent the bill to the National Assembly for examination and passage. But the unsuccessful passage of the bill, which is estimated to have cost 3 trillion naira loss annually to the country, remains key to the development and the unlocking of potentials in Nigeria's oil and gas industry. But the question is, how much of a difference this current bill brings to the table enough to scale the previous hurdles militating against the passage of the PIB? Well, joining us now to answer these questions would be the head of gas and Anaconda Energy, Chichi Emenike, who will be joining us in a second. But let's just do a quick recap again of crude oil prices. Of course, we told you that they were up today, and that was boosted by the comments coming from the U.S. That's the doctors treating U.S. President Donald Trump, and they're suggesting that he may just be discharged from hospital quite soon, and that's just a few days after his positive test for COVID-19 sparked widespread alarm. With health updates eased the political uncertainty in the global markets, pushing Brent crude up $39.69 a barrel, up 1.48%, and U.S. WTI crude was seen at $37.69 a barrel, up 1.73%. We had seen prices slump more than 4% on Friday amid uncertainty surrounding Trump's health, and that has added to concerns that rising coronavirus case numbers could dampen global economic recovery. We also saw prices being supported by an expanding workers' strike in Norway on Monday, and that could reduce the country's production capacity by as much as 330,000 barrels of oil, and that's equivalent per day to about 8% of its output, and that's coming from the Norwegian Oil and Gas Association. Let's get into our conversation now with the head of Gas and Anaconda Energy Limited, talking about the petroleum industry bill. Good morning, Ms. Chichi Emenike. Good morning, and thank you for joining us on the program. All right, let's get into the conversation right away. Tell us how reassuring it is that's this new journey to the passage of the petroleum industry bill to operators like you in the oil and gas industry. All right, so we seem to be having issues connecting with Chichi Emenike. We're hoping that we could get that sorted out in just a moment, but then we'll have to do a recap of the markets again, and we expect. Okay.
14.
It's looking like we
92.
have. It's looking like we have Chichi Emenike join us now. Chichi, can you hear me?
And then passcode 4.
All right, Chichi, good morning. I was just asking you to tell us how reassuring is this new journey to the passage of the petroleum industry bill to operators like you in the oil and gas industry.
BC, can you hear me?
Very well, Chichi.
Okay, good morning. All right, thank you, BC. Thank you very much for that question. With the current discussion on the passage of the PIB is a very good one. We like the body language of the government. Things seem to be moving. I mean, this is a journey of about 20 years. We have been at this for about a decade. This is since the year 2000. But it seems with the recent happenings around the world with COVID, and then the government realizing that we just cannot continue this way. Uh, we just cannot continue this way. So they have put, more attention on this. At least for what we hear, it has passed first reading, and so we expect a whole lot of success. And hopefully, this should encourage more investment in the oil and gas industry. This has been long ongoing. We can't. I mean, we just can't continue like this. So yeah, it's something that is really good and very welcome.
Now, when you look at the bill, of course, there's some reviews which have been in the last 20 years with attempts to reform the petroleum industry, and it has spent 12 years at the National Assembly. So, how much of the disagreements in the past have been resolved in this bill, and what makes it different this time around?
So there's been a lot of engagement. The truth is, there's been a lot of engagement with technocrats, with industry experts. There have been issues of disagreement. I think at the last check, it's about 96 issues. So with where we are currently, 77 have been totally resolved. We've got clarification on about 19. With the current PIB, it seems there's more focus and acceleration for economic growth. And it is long overdue. This is just an issue that has just been stifling business. So with what we are seeing now, there's more focus for transparency, accountability. We even see a focus on gas. And if you look at the peculiarities of doing business in Nigeria, these are some of this is a bill that just has to, has to come to fore. It's the very fundamental, the legal framework for any sort of country. I mean, look at Angola, look at Ghana, I mean, different countries in Africa, they have gone on in place to put in place, fiscals that are clearer. And, this talk about fiscals in Nigeria is one big topic. But with what we've seen now, there's been more engagement, and hopefully we shouldn't have too many issues getting this passed. Like I said, I understand it's even gone, scaled first reading.
But then you talked about the fact that 77 issues out of 96 have been looked at this time around. So what happens to the remaining issues?
Well, there are some clarifications that have been provided. So those clarifications obviously are areas for more engagement. We'll probably get more people into the room. As you do know, this entire bill was a single document. It was broken down into 4 parts. So you've got the bill on administration, you've got the bill for fiscal, you've got the bill for the host communities, and what's the last one? I can't remember it now, but there are 4 of them. And like I said, with 77 out of 97, that's quite a number. I mean, these are rules surrounding business. So what we hope is probably more engagement, and then probably a final closeout.
But then, what would be the reaction of international oil and gas companies to the fiscal and taxation provisions in the bill, and that, of course, that of the host communities in relation to their benefits from the PIB of 2020?
Okay, so what we see, and I would like to talk to this from the angle of doing business in Nigeria, the ease of doing business in Nigeria. So with what the IOCs have always, talked about, had been around a lot of taxes, multiplicity of agencies. But with the fiscals, we are hoping with the current fiscals we have in the bill, we should have some improvement. So now the 2019 offshore reform, took place in November 2019, and then what we have was royalties going from 0 to 10%. But with this, we see better terms, fiscal terms. Like I said, we don't have one of the most attractive fiscal terms here in Nigeria. The terms we have here, if you put it side by side with the ease of doing business, with security issues, cost of production. So for us in Nigeria, cost of production is anywhere between $16 to $22 per barrel. When you look at that and you look at the physical, sometimes we need to even apply them as per projects, peculiarity of projects. You apply some of those royalties on some of the projects and automatically they become non-profitable. So with the hope that this PIB is going to address that, the physicals especially, no business is the what's called the Red Cross. Nobody does this for charity. So we're hoping with this PIB, we get the IOCs to look inwards, look towards Nigeria, try to put in place more investment. Currently, what we have seen is capital is currently constrained. COVID brought a lot of issues. So wherever capital is coming from now, it takes a second look, and capital only goes to where you have greatest returns. So we're hoping with this we can have more attractive. The way you look at it is we haven't been sending the right signals as a country. Okay, so hopefully with better fiscals, you can have the IOC look at different projects they can bring up to speed. And like I said, there's also the gas angle. For us, gas is very important. We look at the energy security for us as a nation. It's something we have to address. We're a nation of over 200 million people. Our population growth, I think, as our last check, is about 2.8% a year. Where's the energy mix to support that? Okay, so these are the things we're hoping, that works for us with the advent or passage of this PIP.
I'm glad you talked about the gas now. Of course, you're a major player in that side. Of course, this PIB has a framework for gas tariffs and delivery with a view to push companies into gas discoveries and development. So tell us how significant and timely is this provision of the bill?
So with gas, what you see is more gas utilization, more focus on gas. So we want to even commend the government. The current government has put a lot of focus on gas. The minister has said 2020 is the year of gas. We've seen major gas projects like the AKK come on stream. The physicals for gas business is more attractive in this PIB. For us, there are also issues that have been addressed around gas pricing, royalties, taxes. Those are terms that investors have been looking forward to. For us, gas pricing, even the issues around the power sector can be sorted out with this gas industry. So there's encouragement for outright gas development. Now, for most of us don't know, Nigeria is more of a gas nation and a crude nation. What the gas have now is mostly associated gas, and most of the main gas is still trapped in the ground. And you need money to bring that gas upstream. You need to bring money you need investment to bring the gas to the wellhead and then take care of the mid and downstream. So there are attempts we have in the current PIB, like I said, that encourage investment for gas, and also speaking to gas pricing that is attractive. It also encourages, what we say in the gas industry, the willing buyer, willing seller kind of situation, pricing that is driven by market realities. Once again, I say this, nobody does business for free. So ultimately, the numbers have to make sense.
Now, one key aspect of the PIB 2020 is the substitution of the NNPC with the Nigerian National Petroleum Company Limited. Of course, the difference is that the NNPC is created via an act of parliament, and the NNPCL will be a registered limited liability company with the Corporate Affairs Commission, and then subsequently the establishment of two other regulatory agencies for the various streams of the industry. What will this unbundling mean for the industry?
So unbundling for us, really, an unbundling of NNPC to be specific, is going to bring more efficiency. Is going to create a profit-driven business. NNPC as it is not sustainable. All right, even the current corporate culture does not work. What you will have is, we see situations where you see the same government in some cases as a partner and the same government as a regulator. What is happening or what is proposed in the PIB, what you should see is the removal of that monopoly. All right, you bring in investors. Government can own shares in it, but you bring in investors who will drive it as a business for results-driven business. If you take a look at the PIB, it says the limited liability company is supposed to be formed in about 6 months. and then take another 24 for a review of the liability, the assets, and so on and so on, and then an eventual, an eventual set off to investors. So for us, unbundling of NMPC is important. And even with the creation of the regulator, so now what you see in Nigeria is so much focused on the upstream. We need to begin to create an entire value chain that works for the industry, the mid and the downstream, and even position Nigeria in the region as, create energy security for the region. So for us, the unbundling of the NNPC just has to happen so that, our national oil company makes sense. I mean, take a look at national oil companies all around the world, in Saudi Arabia and other places. It's high time, we get serious with business. So for us, not sure this is what it means.
Then you see this as a welcome development, but it doesn't seem there's a timeline till the cessation of the NNPC. Should that be some source of concern?
So what I just said is, if you take a look at the PIB, there is a form of the timeline. So you've got 6 months for the creation of the limited liability company, and then you've got another 24 months for the whole process, review of the liabilities, the assets, and so on and so forth to take place. So there is a kind of timeline. I mean, it's not an open-ended process. It's something that has timelines, and hopefully we can work, and achieve that plus or minus within the time frame that is being referred to.
But then if the bill is eventually passed now, what are the chances that the NNPCL has to compete with the likes of Saudi Aramco, the PDSA of Venezuela, and even Petrobras of Brazil, for instance?
Well, like I think I've sort of spoken to this before. With us setting up our national oil company as a proper business, you have investors coming in and now focusing on investments that can be used for more asset development, more energy production, more drive for business, profit-oriented business. And in that regard, funny enough, we can't even begin to look at assets outside Nigeria, because you now have it in the hands of investors. So these days we speak about investors who are more interested in value-driven projects, not merely around volumes. So you see, for all the volumes and reserves we talk about we have in Nigeria, funny enough, you have investors looking at countries like Ghana, Egypt, Angola, that have smaller reserves than we do. But when you position an oil company that comes as a business who is profit-oriented to generate results, even the work culture changes. And then you see across board, driven by goals and targets that move ultimately to drive the vision, and that is for a profit-oriented environment.
Now, at the end of the day, many will want to know how the economy in general will benefit from this bill when eventually passed and assented.
So if we have the industry operating at optimal, I mean, it's a multiplier effect, even on your macroeconomic indices. It's across board. This is more like the 3 A's of energy, like we say: affordability, accessibility, and what's the third one? I can't remember it now. But what we have is even the sectors like the power sectors, the unbundling of it. You have more. For instance, even you bring it to the gas side of things. So with the PIB like this, you have a focus on on gas, not just a crude-driven business. Before, we have talked so much. I mean, crude is outdated. The world has moved ahead. You're talking of cleaner energy. You're talking of renewables. So with the passage of this PIB, what we have is energy security that can support the country, that can support the economy. And if you take a look at the PIB now, you see that it seems the government is more interested in driving value than really revenue or profit, and which is the kind of incentives and the kind of body language that investors are looking for. So, like I said, with this, we expect more. We expect just an unbundling of entire economy and business environment.
Head of Gas at Nikonde Energy Limited, Chichi Emenike, thank you for speaking with us this morning.
Thank you very much, BC. It was my pleasure.
All right, we'll be trading the 2021 budget figures ahead of President Buhari's presentation to the National Assembly this week. Please stay with us. Welcome back. President Muhammadu Buhari is due to present the proposed 2021 budget of 13.08 trillion naira to a joint session of the National Assembly this week. And this follows an early approval of the appropriation bill by the Federal Executive Council. The 13.08 trillion naira budget size has $40 per barrel oil benchmark and an exchange rate target of 379 naira per dollar as its key assumptions. But let's look at how the development this week will engender market confidence and shape investment decisions for foreign and domestic players. And an associate research analyst with Afrinvest Securities, Adedayo Bakari, joins us now to examine this. Good morning, Adedayo. Thanks for joining us on the program. Tell us, what's the view of the market community about the 2021 budget and how much of a catalyst is this budget for the market?
Hi, good morning. Thanks for having me. It's a very important budget given how we've come so far this year. So initially this year, we the FG planned to spend around 10.6 trillion in total. Revenue estimates too was around 6 to 7 trillion naira. But we all know what happened, with the COVID-19 pandemic. The major source of oil for Nigeria, which is from oil, is affected by falling oil prices. As countries had less demand for oil. If people were sitting at home, there was no need to, pay, book flights or travel, and that means that the demand for oil was affected. Now, we've had to revise the budget down to around 9 trillion. Um, that was around the year. But really, for the rest of the year, what we've always known is that most of the expenditure the government has prioritized this year has been recurrent expenditure. So the majority of the bulk of the 9 trillion expenditure is around recurrent expenditure and also government's intervention in helping support the economy amid COVID-19. So this makes the 2021 budget very, very important because we're looking forward to a recovery next year, a recovery in economic growth, a recovery in jobs. A lot of jobs have been lost. So we need a recovery in that, and investors will be looking at what the government plans to do, and that is why the 2021 budget is absolutely essential because it is going to determine to a very large extent how fast we're able to recover from this pandemic.
Now, talking about investor confidence now, of course, the Senate President has assured the public that the month of October will be dedicated to the thorough examination of the budget. So how does this actually speak to investors' confidence?
It's based on the budget cycle. It's January to December, and that means you need to work on next year's budget very early so that it's passed on time and so that implementation is not needed at all. And in this crisis, I think what we can learn from global economies and even locally is that speed matters. So if you want to recover, if you want the economy to recover quickly, you want businesses, to see robust growth. If you want individuals to see, to be able to get jobs and do all these things, you need to make sure that the budget is passed on time. And in Nigeria, we know the budget cycle has sort of suffered for a very long time. Right from the federal government, they submit the budget very, very late to the National Assembly. And from the National Assembly, deliberations take an extended time. And all this affects business and investors because you need to plan against the next year. And if you're planning against next year, you need to know what government plans to do. So the budget is an important source of information to investors and to businesses. And it is absolutely essential that budget deliberations are done on time and the budget is passed on time. Now we're in the fourth quarter, and I think the intention of the National Assembly to fully focus on this budget and to get it passed on time would absolutely be essential to, signaling to businesses and investors and also dictating the pace for the kind of recovery we want to see next year.
Now, Adedayo, let's talk about the assumptions of the budget. Now, of course, the oil benchmark price is set at $40 per barrel. The exchange rate is at 379 to the dollar. There's a GDP growth of 3% and then inflation target of 11.95%. So how realistic are these assumptions?
Let's look at them. The first one is around, oil price, which is absolutely essential. because government still expects to collect, around 45% to 50% of revenue from oil. Now, the $40 assumption is very conservative. I mean, we are aware of all what has happened this year, and since April, we've sort of seen a recovery in oil prices to around $45 per barrel. Currently in the market, $40 per barrel is like the support level we're seeing. And for the rest of the year, we should have an average of around $40 per barrel. And looking forward in 2021, a lot of countries have eased COVID-19 restrictions. Economic activities are strengthening all over the world. Oil demand is picking up. And what this means is that we should see a bit of upside on oil prices. Also, let's not forget that OPEC's output cuts are still in place. So a bit of a lift in demand and, sustained OPEC cuts should support prices even above $40 per barrel. So $40 per barrel is a very, modest assumption. Also, in terms of the oil production, we are expecting to produce around 1.86 million barrels per day next year, which is also very conservative. Nigeria is part of OPEC, and that means we have to comply to our output cuts as well. And that is why we've seen a revision sort of in oil production from around 200 million barrels per day to the current 1.8 million barrels per day. So again, that is, consistent to a very considerate extent. Also, when you look at the exchange rate assumption, yes, we could say that the current pricing of exchange rate in the market is a bit not market reflective, given what is happening in the parallel market, the current FX crisis, the liquidity challenge we have in the market currently, and very, very small volumes is the FX window. But again, at $380, per dollar, 380 naira per dollar, it's a modest assumption, and any revision we're going to see for, going forward will actually support government spending because, oil revenues are in dollars. So to a very considerate extent, I think in terms of oil revenues, I think we have a very, very modest assumption. Now, if you come to the non-oil revenue sources, that is where I think the budget is still a little bit, optimistic. In a situation where you have, economic growth challenges, where you have unemployment challenges, where you have inflation challenges, you have an FX crisis, all these things will affect the non-oil sector. And if the non-oil sector is not growing modestly, then revenues will also be weak in the non-oil sector. So for me, I think we have a bit of optimistic numbers for the non-oil revenue sources. Also, when you look at other sources such as asset recovery, asset sales, fines, this sum up to around 1.5 trillion. This is also low. And if you're looking at historical performance, government has really not been able to target when it comes to this revenue line. And in 2021, we are not too optimistic that we're going to see, a very strong expansion in those revenue lines. So for us, we think in terms of non-oil revenue sources, it's a bit optimistic, and that should mean that deficits may be higher than expected in 2021.
But in spite of all these challenges now, some analysts are of the opinion that the structural weakness in tax revenue are probably the reasons why the projected revenues could underperform, and that implying a larger than projected deficit. Do you share that view as well?
Absolutely. And that's why I said when it comes to non-oil revenues, the assumptions were a bit optimistic, or are a bit optimistic. When you have, yes, the structure of revenue in Nigeria, we know it's, currently almost evenly split between oil and non-oil. But then again, if you discount sources of revenue such as, asset sales, asset recovery, fines, you discover that the share of oil revenue is actually very, very high. Now, for non-oil revenue sources, the underlying, economic performance is weak. If the underlying economic performance is weak, then revenue collection is going to be weak. And we know historically, in Nigeria, the economy structurally is around 60% informal, 40% informal. So you already have a 60% informal economy. They're not paying a lot of taxes. And when you look at the overall tax collection in Nigeria, non-oil tax collection in Nigeria, it's around 6% of GDP. In 2020, it's going to drop below 6% of GDP. So obviously, if revenue estimates are still very, very optimistic, despite these challenges, you will expect that easily the fiscal deficit projected for 2021 will be higher than expected. And that is really the issue that we see with the 2021 budget.
Now, when it comes to, of course, generating revenue now, let's look at the borrowing strategies. Of course, yields in the debt markets have been far lower at single digits in 2020. So do you see an improvement next year as a result of revenue deficits in the budget?
Well, what we've had this year, total deficits at the beginning of the year was around 2.1 trillion due to the COVID-19 pandemic, which affected, oil revenues. The budget revision we had in Q2 suggested that, deficit is going to be around a little over 4 trillion this year. Now, a lot of this borrowing is being done, locally because obviously accessing the external markets via Europe is a bit difficult. Also, we've had $3.4 billion in budget support from the IMF. That has helped government spending as well. In 2021, the government is projecting, total deficit around, over around 5.1 billion. Now, obviously, that is already very, very high. But given that we expect that revenue is going to underperform, we think deficit will easily be over 6 trillion next year. And yes, a lot of this borrowing will most likely be done in the local market. And there are reasons for that. Currently, investor confidence in Nigeria is weak. So you might issuing, commercial debt in the external market, that is Eurobond, might be difficult, in the immediate or, in the near term. And that is because, when you think of the policies we've taken around, FX restrictions, FX liquidity, Nigeria is not a very good, investment destination currently. So we believe a lot of the, 6 billion deficit we're expecting in 2021 will be funded in the domestic markets. Now, there's still a lot of liquidity in the market, and the CBN has also aggressively tightened. I mean, they're tightening through CRR debits with banks. So in 2021, as the government sees the needs to come to the markets, we should see, the CBN easing some of this liquidity for the banks, and we could see, a situation where we have an environment that is still conducive for the federal government to borrow. Because if you look at the current standing of things, yield on Nigerian Eurobonds are on some tenors are less than yield, on domestic bonds locally. So it's really a good environment for the government to borrow, and we think it will remain so in 2021.
Well, thank you. Associate Research Analyst with AfriInvest Securities, Adedayo Bakari. Thank you for your input on the program this morning.
Thanks for having me.
All right, let's get a review of last week's trading activities at the Nigerian stock markets with Edidiong Iwang. Good morning, Eddie. So we saw the bulls dominating the market last week. Tell us what drove the numbers.
Good morning, BC. You're right. The bulls dominated the markets last week, and that led to the year-to-date performance leaving the negative territory. And the market drivers last week were Dangote Cement, Boa Cement, Zenith Bank, GT Bank, and MTN Nigeria. Now, all those pushed the market up by 2.53% to 26,985.77 points. And the year-to-date return now stands at 0.54%. The equity cap was at 14.105 trillion naira last week. Activity was lower as volume declined by about 2.23% to 1.53 billion naira billion units. Value declined by about 17% to 16.90 billion naira, and all of that was traded in 17,882 deals. Sectoral performance was broadly positive apart from consumer goods, which declined by 0.75%, and that was due to the 6.67 decline on Nigerian breweries. So that was why we saw that decline on consumer goods. Banking was up 4.24%. Industrial goods was up 3.25%. Insurance and oil and gas also posted gains last week. Let's talk to Charles Fakoga, the chief dealer at City Code Trust and Investment. Good morning, Mr. Fakoga. Thank you for joining us on the program.
Yeah, thank you for having me.
I'd just like to get your thoughts on this. What are the market expectations from Q3 earnings by listed companies?
Bullish last week, and we expect that to continue this week. And at the same time, we're also going to be seeing a bit of profit taking. But overall, we're going to see the market still remain bullish because investors are going to be positioning themselves for end of year numbers that will be coming. At the same time, we are seeing a gradual recovery of the economy. Fitch Ratings have raised our economic rating from negative to stable. So more and more investors, as everywhere is opening, we are going to see more and more numbers coming in, improved. And of course, different investors are advised to position themselves so that they get the benefits when we begin to see this bullish trend continue.
Okay, can we speak more to earnings now? Q3 earnings from companies, what are we expecting?
Yes, for the listed companies, the earnings that are going to be coming will not be far too different from what we have seen from Q2 and, of course, H1. So, again, investors should do their little homework, get close to their stockbroker, position themselves for companies that have that pedigree, companies that have shown in the past that, yes, despite the harsh economic environment pandemic, they are still going to post negative returns. And most investors are usually driven by dividend yield. So for those companies that have shown that in the past, investors are expected to position themselves. So I see most usually from the banks, the consumer goods sectors, industrial sectors, I see positive numbers coming from those areas.
Mr. Fakoga, last week we saw the year-to-date returns turn into the positive territory. Oh, I think we've lost Mr. Fakoga there. Let's just look at the unlisted securities market, which was positive last week by 0.25% at 734.39 points, while the market cap came in at 539.46 billion naira. We saw about 2.32 million units worth 490.21 million naira traded in 37 deals. I would also like to point out that these numbers were better than last week's performance. Well, we'll have to take a break there from the markets. Over to you, BC.
Thank you, Aditi. Of course, we'll come back to you shortly to review the debt and currencies market. Plus, we'll be crossing over to London to check this morning's headlines. Please stay with us. Well, let's now travel to London, where Juliana Olayinka is waiting to give us an analysis of some of today's major business headlines. Good morning, Juliana. Well, let's begin this morning with the latest coming from Chancellor Rishi Sunak, who says that the £238 million job entry targeted support scheme will help job seekers who have been out of work for at least 3 months. Do we have details of who in particular will be benefiting from this new scheme?
It will be for people that have been out of work for more than 3 months. We suspect that there are over 100,000 of those. The Conservative Party conference, the annual conference, has been going on over the past couple of days. And of course, if it wasn't for COVID, they would have been scrambled at an event conference somewhere. But it is remote, and today is the turn of Chancellor Rishi Sunak. And as you said, he'll be announcing this new support for people that have been out of work. His winter economic plan has come under quite intense scrutiny, and there are sectors of society that the opposition members believe that he has left out. So he will be addressing them today in this job entry targeted support program. 13,500 people are going to be recruited to assist people who have been out of work trying to upskill. So they'll be helping them rewrite their CVs. They'll be preparing them for interviews. And I think most importantly, there are so many jobs that the government considers considered to be unviable. The jobs that are viable, people will need training. And so they're hoping that this JETS program will bring them up to speed and they'll be able to find new recruitment in the workplace.
Now, preliminary data from an industry group released today shows British new car registrations fell by around 4% year-on-year in September, which is usually one of the top 2 months of the year for sales, of course, thanks to the coronavirus pandemic, which has continued to affect the sector. But how bad is the situation this time, Juliana?
Well, it's not great. I think we've seen that across all industries here in Britain, particularly the car industry, because during lockdown, most people didn't go out. They were staying at home. And if you're not going out, you don't need to buy a new car. I think there are some estimates that £21 billion will be lost from Britain's car industry by the end of the year. In September, as you said, is usually a bumper year. That's when new plates are released. So if you're lucky enough to have a brand new car, September is the time that you would typically do it. But that hasn't been the case. Year on year, sales are down by 4%. And it's only that low because last September, it wasn't really a great year for car manufacturing in the first place. But of course, this has been compounded by COVID-19 restrictions. Just 328,041 brand new cars were bought. The industry, of course, are hoping they'll be able to recover. But considering we have Brexit and some other major matters of concern, this appears to be a trend that will keep going for some time.
All right, one last question, Juliana. That's a survey from the British Council for Officers, which has found that employees at all levels, talking about executives to trainees, intend or hope to divide their time in future between their homes and their workplaces. And that means that the pandemic has changed working patterns for good. What more does this survey reveal?
Well, I think you've gone through most of the details there. And really, yes, it's just revealing what we already know, that working from home has become, for many people up and down Britain and across the world, a luxury that they don't want to give up. It's good for them, employees alike as well. Employers have found that their staff can be more productive. Flexible working hours have become a trend. I think in Britain as well, what is unique about the situation here is that, of course, the Prime Minister asked people to stay at home. He then said people should go to work to save their local high street. And then he reversed it just a couple of weeks ago, saying that people should stay at home. And the issue is a lot of people hadn't even returned to the office anyway. So now they don't really foresee themselves doing that for some time. There are some major city organisations, particularly banks, that are pretty comfortable with their staff working from home. I've spoken to some services on the phone, and they always give you a message saying that the person on the other end will be at home, and it seems to be working fine. The only issue, of course, here in Britain is the economy, because people coming into the workplace are the ones who, keep their local stores open. But according to this survey, managers are completely comfortable with that. It'd be interesting to see how the government respond.
All right, Juliana, thank you for this update. We'll see you again in the afternoon.
Thank you.
And it's back to Edith Young for a review of the debt and currencies market. Over to you.
Thank you, BC. Well, the bond market ended last week bullish as investors reinvested coupon payments and maturities. The average yield on that segment across instrument on that segment contracted by about 24 basis points. Now, across the curve, the demand was heavy at the short end of the curve, while sell-offs caused the long end to contract. On Friday, we had 16 deals worth 6.20 billion naira. The Nigerian Treasury bill secondary market was quite bearish last week on the back of reduction in system liquidity. Now, sell-offs in both the Nigerian Treasury bills market and the OMO market caused yields on that side to increase. On Friday, we can see activity there was really, really low. We had just 29 deals worth 38.97 billion naira. The OMO market was also bearish last week as yield expanded by about 13 basis points to 1.9%. On Friday, we had 4 deals worth 27.50 billion naira. But let's talk to Tolu Lopez Shebanjo, a fixed income dealer at Access Bank. Well, okay, we don't have Tolu there. We could just go over the other markets while we wait to get him. The equities market was bullish last week by 2.53%. The market erased its year-to-date losses, and then the year-to-date returns came in at 0.5%. The all-share index was at 26,987.77 points, while the equity cap jumped to 14.105 trillion naira. Activity was lower last week. We saw volume coming in at 1.53 billion naira, valued at 16.90 billion. 1.53 billion units, I beg your pardon, valued at 16.90 billion naira, all traded in 17,882 deals. Sectoral performance was broadly positive, apart from the consumer goods sector, which declined, and that was solely due to the decline on Nigerian breweries. The banking index was up 4.24%. A lot of the banking counters gained yesterday. GT Bank was one of the banks that moved the market performance. Zenith Bank was also up. We saw gains from Sterling Bank, UBA. Industrial goods was also up due to the gains on Boa Cement and Dangote Cement. Insurance goods was up, while oil and gas also increased. The unlisted securities market was up 0.25% at 734.39 points, while the market cap was at 539.46 billion naira. We saw about 2.32 million units worth 490 million naira traded in 37 deals. Well, unfortunately, we haven't been able to get Tolu Lope on the phone, and we'll have to leave you there on the market today.
But in spite of all, we hope for a profitable trading week. And that's where we wrap up today's program. Thank you for watching. I'm Bisi Adebayo.